Good weekend, all. Hope you all had a great trading week. I did. And I'm hoping that you did also. This is Friday, and we are now at the 30th of September. It's your weekend edition of your metal market wrap-up. But it's also the end of a week, a month, and a quarter. And it has been wild, to say the least. Obviously, the stock market's taking it on the chin. Interest rates are running to the upside. And the headwind for the metal markets has been and continues to be a dollar that stays stubbornly strong and might go higher. Now, how much higher is going to be debated for a long time. Obviously, a big chunk of the move has been had. And the reason is that at some point, us probably closer to making an end to interest rate hikes than other countries that have to keep fighting it. That doesn't mean I know when that's going to happen. I don't. But I don't think we're that far away. I think that in terms of hikes, are you going to have to go to 4.5%, 5% to get ahead of a 4.3 core inflation rate? That's it. What does the Fed have to do, and how long does it have to stay strong over that number to get to what's called a neutral rate? I don't know. First of all, I don't even know that the Fed knows what neutral is. I'm not convinced that anybody does. But at least we know what core inflation is, and I'll look at it at that. Will the sticky items break? And that's why they look at core inflation. They exclude the volatility in the energy and food. Now, I don't know how sticky food isn't right now. It seems to be stuck with high prices, but that changes over time. But rent doesn't change. Your cable bills aren't changing. Your insurance premiums aren't changing. You see what I'm getting at? There are sticky items that you have. So you've got to look at those and what eventually causes some of those to slip down, because the Fed's goal of 2% is a nice goal. I am not convinced I'll be alive by the time they get there. I have heard for how many decades these magic numbers that they come up with that they don't ever seem to hit. Do they have to? I'm not convinced they have to. But certainly this is way too much, and the market will be able to deal with it as time goes on. Keep remembering this. Nothing's set in cement. 2% can become 2.5% or 3%, right? Easily. So it's a goal, and then they adjust. If they're data dependent, they're liable to say this is the new norm. Okay, I can live with that. The dollar today is very different than a dollar was 10 years ago. Do you disagree with that? Okay, it is. In America, we think it buys an awful lot less inflation or not, right? I mean, just the way it is. All right, when we come to the gold market, gold has been on one-sided trajectory. It has fallen nearly $300 an ounce as the dollar has gotten strong. If you lay the two on each other, you get a pretty good picture. When I look at the close-only chart, you're up 1% for the week. That's good. It was up just the other day, about 0.67, so it ended up on a firmer note. Why? Because you're fighting right now for support between the 200-week average, that's the gray line, and the Bollinger Band. Remember what Bollinger Bands are. They're an algorithm designed to keep the market trading within them 95% of the time. Therefore, as the market falls down to them, automatically, according to the algorithm, you're in a support zone. When the market rallies up to them, you're in a resistance area. Can the market get over the band, or can it get under the band? Well, of course it can. Otherwise, the band would have to be set at 100%, and then it would never exceed the upper and lower band. But why have it on the chart? It's useless at that point. So you're looking for some number. I've seen people adjust the bands. Instead of 95%, they'll want a 98. They'll want a 93. I don't see the logic. I want to do what the herd does to a degree, but then I want to improve it. So in my playing with the bands, which I did for a while, I came back and said, oh, that's okay. Where I started making my improvements, for me at least, was in how to measure the slow stochastic momentum. I ran it by the gentleman that founded this, George Linn, who's no longer with us, showed him my thoughts on it, showed him what I learned with that, and it took me a decade to put it all together. trying, you put it away, it's not good. It's now one of my mainstays because I just find that of all the things I see in charting, this is probably one of the best there is that I've ever seen. Not because I learned how to work with it, but because I can teach it to others and they can work with it. Nothing's good if it's only you can do it. Think about what I just said. He's the greatest mechanic in the world. Great. He dies. I can't find another one. No, he was a great mechanic because he could teach the guys in his shop how to do things the way he did, and you keep going there. Logic to it. That's what I do. There'll be the ad on this at the end. Learn from me how to work with this. You'll use it on spiders, ETFs, the stock market. If you can chart it, you can use it. If you don't like it, okay, you learned another technique. You know how many I've learned and don't use? Plenty. I can tell you, I've learned them from the best too. I mean, really the best. But sometimes they don't fit my personality, my temperament, whatever it is. Okay, so you're down here. This is your battleground. There's nothing bullish on the chart. It got down too cheap here. How can gold go up if the dollar keeps going higher? How can gold go up if interest rates keep going up? It doesn't make sense. The whole goal is to fight right now inflation. This supposedly, I want to use that in quotes, is an inflation fighter. To a degree it is if your currency's priced in Turkey. So let's assume you're using their currency and you got inflation at 80% a year. Well, gold's done pretty good holding your value together. What people buy there is the stock market, the big companies that can pass on the increase. I explained that in my financial update once. They have one of the best performing stock markets in the world. I know you're going to say, he's nuts. Go take a look. And I've given you the reason why. Where are you going to move your money? They don't want you to move your money out of Turkey. You know, there could be capital controls, all kinds of things. But you can buy stocks. Well, why not buy the companies that every day you got to buy their goods? Keeps it going. Logic, I didn't realize it. I read about it and I said, whoa, that makes sense. The trend is down, lower highs, lower lows. If you get over 1736.40, you break the pattern, which means breaking the trend. The market is fighting a battle, as you can see at the 200 week. You do agree with that. And the Bollinger Band. Okay, so that's where that came from. And momentum right through here flat. Okay. Let's go to the gold-silver ratio. As long as it stays under the 18-week average of closes, silver is trying to be stronger than gold, meaning it wants this number to drop. In a perfect world, you go into one of your favorite shopping stores. You're a thief. You take their push cart, be a grocery store or whatever. You fill it up with silver. You go 3 doors down in the shopping mall. There's your friendly coin merchant. He's not going to take a commission. And you're going to look at him and he's going to open up his book or his quote machine. Oh, there's the mercury. Yeah, there's where the ratio is. Right now, if you give me 87.32 ounces, I'll give you an ounce of gold. And that's how, in a perfect world, it works. And I hope you return the push cart. In the silver market, what you have to do to start an uptrend, which you haven't done, is at least close over 1970.10. And then the bigger number of resistance will be the 200-week average. But right now, the trend is down. The market is corrected in oversold condition. Any number under 30 is oversold. You're not there. So the bears are still in control of the market. Got it? In the copper market, battleground is so crystal clear. It began back here when you first hit the 200-week, and that's it. Remember, this is a 4-year moving average. Now, I realize everybody talks. So copper's the market you want to own in metals. It's going to be on fire. They can't produce any more than they're doing. They got problems getting electricity and other power and diesel fuel and everything they need in the mines to get them the full production. Everything is true. The problem is there's a lack of demand in a world that is fighting what? Inflation, and the central bankers are creating recessions by design to curtail demand. That's what you got to do. So that's why this market has sold off. It took me a while to figure that one out too, and then I was able to put 2 and 2. Now the wild card there, by the way, is China. Why? Well, the party Congress is on the 16th. China's got to roll something out. If President Xi once that third term. I can't imagine him going in with his property market in this way, the economy terrible. Today they made a big announcement. They upped all the quotas back to 2021 levels for oil production. So they'll be importing more Russian oil. They've got what they call teapot refiners and the big boys, and they're going to export that, which helps the world. It gives a continued bid to a degree in the oil market, but it helps them take in currency because once they buy that and refine it, there's waiting markets all through Asia and everywhere else for oil, especially the products. They need them badly. So why can't he do that in infrastructure, to help housing and so on? These are my thoughts. First thing he's got to do is get away from that crazy COVID policy. When you look at the dollar index here, where's the resistance? I think you see it. The Bollinger Band keeps stopping this market on the rallies. It can ride it for a bit, and this was super unusual, by the way. One of the more unusual events of the year in the dollar, that it was able to stay and keep staying over that, and eventually it had to pull back in, and it did, and that's unusual. But where did it come from? It had come from, if you look at the bands, how narrow they were, and that's what I teach you here, and that's what I teach in my course, by the way, which you should learn, is it acts like you're in a pipe and you're winding up a spring, and eventually it's going to burst out. And when it does, a trend of some type will set an up or down, and then you break away from that with the energy that carries the market. It's a pretty simple concept. So, my advice to you, learn what I'm telling you. Take the Enhanced Bollinger Band course, 13 chapters of video, shows you what to do. You do the same thing. Then you get 2 weeks while you're taking it to my morning subscriber videos. They're recordings. You can watch them either as I post them or you can watch them later in the day. You'll see how it sets in, since you're going to get it both in spiders, ETFs, the stock market, and futures. You got a full array to learn from. Take a look at this ad. By the way, you can always click right over my head. There'll be an icon up there when you move up your cursor. That'll take you right to it. I'm Ira Epstein. You have a great weekend. One final thing. I knew I forgot it. I'm going to have a webinar this coming week. So look in your mailbox, your email box, that is, for the invite. It's going to be this coming Thursday. And it's going to be at 12:30, so clear your deck. I don't put recordings of them out on the website. You either attend or that's it. We filled up on the last one, so these things are picking up a lot because this is only the second one since the season began, which to me was right at the end of August. I'm Ira Epstein. You have yourself a great weekend. Talk to you all Monday. Take care. Welcome. I'm Ira Epstein, and I'm here to talk about my Enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.